What is taxable income? You got your paycheck. You know how much you made. So why does the IRS tax you on a completely different number? That number is called taxable income. And understanding it can save you real money. Hi, I'm an enrolled agent, and this is EA TaxWise. Today I'm breaking down what taxable income actually is, how it's calculated, and why it's almost always lower than what you earned. Taxable income is the amount the IRS uses to calculate your tax bill. It is not your salary. It is not your total earnings. It's what's left after you subtract deductions and adjustments from your gross income. Here's the simple formula. Gross income minus adjustments equals AGI. AGI stands for adjusted gross income. Then subtract your standard deduction from AGI. And that's your taxable income. That's the number your tax rate is applied to. Now what counts as gross income? Almost everything. Your W-2 wages, freelance income, rental income, interest, dividends, and capital gains. Even unemployment benefits. But here's what surprises a lot of people. Some income is not taxable. Gifts you receive, most life insurance payouts, child support, workers' compensation, and qualified Roth IRA distributions. Once you have your gross income, deductions bring it down. If you take the standard deduction, which most people do, that's a flat amount based on your filing status. For a single filer, it's $16,100. For married filing jointly, it's $32,200. That means a single person earning $50,000 doesn't pay tax on all $50,000. After the standard deduction, their taxable income is $33,900 or less. Here's something I see all the time as an enrolled agent. People assume their tax bracket applies to every dollar they earned. It doesn't. Tax brackets apply only to your taxable income after all deductions. So when someone says, I'm in the 22% bracket, they don't pay 22% on everything. They only pay 22% on the income that falls within that bracket. Understanding this is the foundation of smart tax planning. So to recap, taxable income is your gross income minus adjustments and deductions. It's almost always lower than what you actually earned. And that difference is where your tax savings live. I've linked the full article on eTaxWise.com in the description. Subscribe for more plain English tax explanations. And I'll see you in the next one.